Hello, wonderful people. It's been a while. I have to apologize for delaying releasing another video. It's been a very busy and a hectic week for me, but here we are. Here we are. And today we'll be looking at something very interesting. Remember, if you haven't subscribed to this channel, kindly do that. Hit the subscribe icon and see so you get notified when I release other videos as we continue to learn the advanced, because we've gotten to the advanced stage. And thanks for those that have come so far with me on this journey right from the beginning. Thank you very much for your reviews, for your comments. I'm really glad I've been an inspiration to you. I'm really glad you're learning. I'm really glad you've been getting value for these videos. So we'll continue to do that. And for those in the group, thumbs up. You all have teaching me some things. Someone even taught me using Oshimaku recently. So that's your idea of the group. We hope we all become a family, or teach ourselves, and grow together. So without wasting much time, today we'll be looking at the market structure. Now, basically, there's a direction in which there's a pattern, a way in which the market moves, especially when it is being manipulated by the market makers. It has some features, some things you see and you know this is the handwriting of the market maker. So I talked about it in my previous video, how to trade the news. I mentioned some things. If you haven't seen that video, kindly, you might not understand some things I was saying in this particular video. So just go to my channel. You see the previous video before this and watch it, how to trade the news, how to see when the market is being manipulated. They do these manipulations with most times with news release. They work on retail traders' emotion and move the market against retail traders' direction. So quickly, we'll be looking at this market structure, how the market moves when the market makers are working on a particular pair. So I've tagged them, well, they are basically called, the first one is MAAW, and we also have the WVVM. These are just movements. You understand them. I'm going to try and draw them. I want to make this video as short as possible. So please, if I'm rushing, please, you have to bear with me. If you have any questions, ask in the comment section, I will definitely reply you. So let's quickly go on and start off with the first structure, MAAW. What do I mean by the MAAW? Let me go to my next slide. The MAAW, this basically is one way in which the market moves when they've worked on the market, when it is now going bearish. They work on a bullish market. In my previous video, I talked about the whole idea of a stop hunts, and then if you've not seen it, remember, go behind and you see the video. So let's assume, I'm going to try and make this as practical as possible. Let's assume market has this high here. Market has this high formation, and what happens? Remember, my previous video I said when there's a major news release, they come and spike off that high, activate your buy stops, hit your stop loss, deceive those some that are selling as well, hit their stop loss by going a bit higher, widen up spare, and then quickly reverse the market downward. So the market then forms an M formation. So we have an M. So the market keeps going down, sharply goes down, and then stalls, consolidates, comes up. Remember, market doesn't move in one direction, so we might see some movements like this. So market consolidates, comes up. What happens when this is happening? They are taking out those that are riding along with the market makers. Those that are selling, definitely they would have moved their stop losses into profit. So they're going to hit all their stop loss, and even as well deceive some people to buy. Some might think, oh great, the market is buying now. Let's hop on. They'll hit a buy, but then boom, they're trapped. Market comes back down. So we have a first M or a first A formed already. Market comes down and then stalls again, does some consolidation, hits those that are selling, hits their stop loss in profit, and then boom, moves to another level, goes down. And finally, at the end, in a reversal, you then see a W formation like this. So this is basically the MAAW formation, one of the market structures. The MAAW, this is what it looks like. I'm going to try and explain it again because I think I was rushing, so I won't disrupt my drawing. So great. So we have the M formation. I've explained this, how this forms stop hunts, widen up spread, take out your stop loss, deceive retail traders that have their buy stops above this high, take them out, and the market comes down. And so this is the first level. This is the first level. And label it L1. And then market consolidates afterward. I believe you know what consolidation means. Market consolidates, market ranges, market goes up, takes everyone, those that have their stop loss in profit, takes it out. So it forms this A formation and then comes down again, consolidates, goes up, takes out some more stop loss in profit. Well, this is the level 2, and then moves for level 3. Usually level 3, after level 3 is usually the longest ride. It's usually the, like in this case, you'd have seen it would have gone deeper. That is the longest ride, goes all the way down, and then would have made a reversal. You know what happens here? I explained in my previous video the same thing. They deceive those that have placed a buy, a sell stop below this, activate their order, hit their stop loss, widen up spread, and then reverses the market. So usually what would you do at every point when you notice this has happened? What would you do? You will wait. If this happens, don't always rush the market. As I always say, a safe entry is better than a sniper entry. Wait. When you notice this has happened, we should wait for this consolidation to happen. So when you see this consolidation happen in the market, you can box it up, draw a box, your consolidation, your range zone, box it up. And what they do most times is the tip of that consolidation, the highest point of that consolidation, market might move up there to hit. That's where most people will put their stop loss above the range. And some will also put a buy stop above the range. The market goes there, hits it, and boom, comes down. The same thing with this level. The same thing before level 3. It's usually characterized by one of the longest duration of range of consolidation. So this I just drew here. You might see this you might not see it perfectly at this, but if you look closely, look at all your time frame, look at the M15, look at H1, look at H4. You see this, you see all of this. So before the last consolidation, the market makers don't want you to enjoy that profit. So they usually spike it all the way up, consolidate, and it consolidates for a long time. And that phase is called accumulation. They usually accumulate orders. Both people that are buying, those that are selling, they accumulate. They give different candle patterns, different formations. So everybody, both buyer and sellers are hopping in, and then market keeps consolidating. And then what happens afterwards? Boom, they go all the way down, and then reverses the market eventually with a W formation. Basically, that's the MAAW. If you have any question, ask me if you don't understand this. So without wasting much time, I'm going to go on to the next formation, which is the WVVM. The same way we have the MAAW, we also have this. It's basically the same explanation, just turn it the other way around, and you understand completely what I'm saying. So let's draw it. Let's draw it together. So you have this formed. You have a W. You know how this forms: spike, widen, spread, take everybody's stop loss out, and then boom, they move. Then they come back, take those stop losses down in profit, ranges, and then come all the way up again for a level 2 rise. Consolidates, pulls back, consolidates, and takes all those stop loss in profits, deceive buyers, deceive sellers, hit their stop losses, and then market goes up, and then reverses with an M formation. So this is basically how the market moves. This formation, if you can spot these formations when the market is being manipulated, you hop on with them, you join. When you see these pullbacks, when you see this happening, you join. When you see this happening, always remember to mark it up. After the first level of rise, you label it as level 1, and then you see the consolidation. The second movement, you can tag it as level 2, and then another pull back again, and then this is usually the longest push. The third level is usually the longest push, and also characterized by the longest consolidation or the longest range before it happens, and then eventually the market reverses with the M formation after. You know what happens here. Talked about that already. So guys, that's the MAAW formation and the WVVM formation. Before I did this video, I was looking for a perfect setup to show to everyone. And I have to be honest, that's part of the reason why I have delayed in releasing this video, because I actually wanted to make sure I have an example. But yeah, I'll try to show you this, and this can also serve as a market review, because I'm going to do a market review after this video and post my market review for the week. So this is what I think will happen to USD Canadian dollar. It has been worked on. Remember, this was the example I used for the how to trade in news discussion. If you remember, if you've not seen the video, go to the previous video. So USD Canadian dollar has been manipulated. We have this formed, we have this low, they manipulated, hit everybody's stop loss with this long wick, and then so we have a W formation. So we have a W formation here, and then we have a level 1 rise, and then we have this we can mark up as the level 1 consolidation range. So we are looking at either buying after a breakout from this zone, or most probably, let me draw a rectangle. Where is my rectangle? Let's draw a rectangle and see that range. So you can see. So this is our level 1 range. So great. So we're gonna wait. Most probably the market will come, touch the lower range again, or as well go below the lower range, because most people that bought from here, they would have set their stop loss below the range. So market might come down, hits their stop losses in profit, and then moves all the way up. Or we might see market just go up above the range, the highest point of the range. But most people would have set a buy stop here. So hey, look at what the market might do. With all those buy stops up here, market might come, activate their buy stop, and then bring them back in loss, probably hit their stop losses before going up. So always wait for that setup, and when you see it's a clear setup, you go in. So I expect USD Canadian dollar to continue to rise further. I'm going to do a market review after this video, so that's why I advise you to hit that subscribe icon so you don't miss out. There's going to be a lot of pips to catch during the week. So remember, if you're interested in joining the group, kindly chat me up so I'll add you up to the group. Let me see if I can show you a W formation or an M formation of USD. USD Canadian dollar didn't have a good setup. It didn't have a good setup. So let me show you Euro. I saw this on my MT4 on my phone. I don't know if TradingView will have the same, can show me the same thing. You can look at your phone. If you can look at your phone on the, you look at the 1 hour Euro against the JPY, you see a similar W, and then spike up. We have this pullback for the V, spike up level 2. We have this pullback for the other V. And then the longest run is the level 3. The longest run, you can see long run, and then they reverse it, this M here. So Euro JPY most probably going to continue falling down, because what I tag the market makers is use and dump. They use the pair and then they dump it. So Euro JPY has been used, has been dumped off here. So I'm projecting that Euro JPY is going to continue to drop, it's going to continue falling. So, and USD Canadian dollar is going to continue to rise. So guys, that is it. If you have any question, do not hesitate to ask in the comment section. If you want to reach me, my number is up on the channel. And then if you're interested in joining our Telegram group, kindly chat me up, and I'm going to definitely add you up. I wouldn't hesitate. So guys, stay safe, be good. I wish you all a wonderful week ahead and a profitable week. Thank you.